Good afternoon and welcome to the Market Closing, our collab show between the Business Today and India Today television channel. It's 3 p.m. and we are here to get you all the market closing action. I'm Sakshi Batra. First up, let's take a look at what's happening in the corporate as well as the financial space. Right ahead of Diwali, gold and silver have hit record highs on MCX. Silver is now nearing the 2 lakh rupee mark per kilogram, trading at around 1.92 lakh rupees. Also, 24 karat gold is now trading at 1.28 lakh rupees per 10 grams in Delhi on strong investor demand. Rupee rebounds 88 paise to 87.93 per dollar, aided by RBI intervention. Reports also of easing dollar strength, recovering from its previous record low of 88.80 per dollar on Tuesday. Stock markets rebound after a two-day fall. Nifty jumps 200 points to now near 25,350 mark. Sensex is also up by 600 points at around 82,600. Broader markets outperform. Mid and small cap indices gain over 1% each. Real estate and metal stocks also shine. Reports from sources suggest government is planning mega bank merger by FY27. Smaller public sector banks will be joining larger banks. Cabinet and PMO will be examining the proposal. PSU Bank buzz lifts the index by 2%. Punjab and Sindh Bank, also Indian Overseas, Bank of Maharashtra, they're all up by anywhere between 4 to 8% today. Auto industry sees steady growth in September. As per the SIAM data, passenger vehicle sales are up by 4.4% year-on-year to 3.72 lakh units. Two-wheelers are up by 6.7% to 21.6 lakh units as well. Tata, also Maruti, Hyundai and Mahindra have led the sales, with compact SUVs and sedans performing strongly. Let's straightaway look at how the markets are trading in the last 25 minutes of trade. 25,300 is finally with us in the run-up to Dhanteras and Diwali. You're seeing a broad-based run-up across the board. All the sectors are into the green, led by real estate, PSU banks and also the broader markets. After yesterday's downturn, we are seeing smart rebound take place in the markets. What are the top gainers on the Nifty today? Well, you have a few NBFC names like Bajaj Finance leading, followed by Bajaj Finserv, also Nestle and Asian Paints. Remember, FMCG consumer space also in focus. Geo Financial Services, L&T, HDFC Life. These are the top movers as far as the markets are concerned. A large part of it are from the banking universe and the NBFC space. What's actually dragging today again is Tata Motors, Bajaj Auto, Infosys, Tech Mahindra. Remember, Tech Mahindra reported results yesterday. It's reacting to that today. Axis Bank also, right ahead of numbers. You are seeing some weakness there. Tata Consumer Products, Dr. Reddy's. These are all the other sectors, stocks that are still down as far as the Nifty is concerned. What's buzzing in the Nifty 500 basket? Well, you do see some names from within, the basket of auto ancillaries like Bharat Seats that's up in trade. You also have Urban Company that's up by about 10-odd%. Remember, Urban Company will be very important to watch out for tomorrow as the share lock-in period ends after a month of getting listed. So there could be some pressure tomorrow. Tatva Chintan Pharma, GM Breweries are some of the other stocks in the Nifty 500 basket that are definitely hovering higher. PPAP Automotives is also among the top movers today. Let's in fact now welcome our guest on board, Mr. Avinash Gorakshakar, market expert, is now with us on the program. Avinash, warm welcome. Good afternoon to you and season's greetings for upcoming Diwali to you and to all your loved ones as well. Finally, after days of weakness, the stock markets is also reflecting the festive spirit on D Street as well. How are you looking at the markets? What do we expect up until Diwali?
Yeah, good afternoon, Sakshi. I think, before I start, Diwali wishes to you, all the team members at your channel. First of all, I think the markets have been pleasantly surprised by, a very good corporate earnings numbers. Today, I was seeing the numbers from HDFC AMC, a 25% growth in profit plus a bonus issue. I think this is what the market was wanting. And I think if you get better corporate numbers in this earnings season, I think that is the trigger which I think has worked up till now ahead of Diwali. My sense is that I think the markets have now discounted the import tariff issue. They are looking at the fact that it might happen maybe a little later, but it definitely will be in favor of India. But I think broadly corporate earnings numbers have been very good. I think if you look at now the stream of earnings which have come till now, broadly they are in line or better than expectations. And I think that is something which has helped the markets. So I think if this trend continues, Sakshi, we could see the markets galloping further. And I think liquidity is ample in the market. Most investors like family offices, HNIs, mutual funds, they are looking at good investment opportunities at good valuation. So I think this trend will continue. But I think in between, I think there could be a little bout of selling, because currently, even as of now, the FIs are still on the selling side. The domestic funds are doing most of the heavy lifting now. So my sense is that it's going to be a stock specific market. I think you're going to see better numbers and the markets giving a good kind of re-rating to stocks which do better. So net, I think keep the approach stock specific as of now. The index definitely would remain in a very close range.
Okay, we'll come to your stock-specific ideas as well. Remember, viewers, we've been speaking to a whole host of top market experts to guide you through as far as the Diwali outlook as well as the next Samvat outlook is concerned. So on Business Today Television, in a special Diwali edition, my colleagues Abha Bakaya and Siddharth Zorabi, in an exclusive conversation with Sunil Singhania, the founder of Abacus Asset Managers LLP, has discussed the markets, how they have fared through this entire year, full of challenges from global uncertainty to shifting domestic trends, and also he shares a market outlook as to what will drive the Samvat and the sentiments in the new year as well. Stay tuned for that.
The past Samvat has been a bit of a challenging year as far as the benchmarks are concerned and returns, and we've seen several factors influence market behavior as well as investors' perception. How would you summarize the year gone by, and what lessons do you think it holds out for the coming Samvat?
Happy Diwali, Siddharth. Happy Diwali, Abha, and happy Diwali to all the viewers who have taken time to hear us. Obviously, as you rightly said, last 1 year has been a sort of challenging year. We have not seen too many, I would say positive news flow, and it's getting reflected in the returns also, which have been almost flat from a 1 year perspective. And after a long time, I would say Indian markets have underperformed some of the global peers. There's also some of the other asset classes which are right now in a lot of favor, which is gold, silver, etc. But actually, if you see and you go back a little bit, I think last 2020 to 24 was a great period. And when you have a good time, I think people do get carried away, investors do get carried away, and somewhere in the mid 24, markets had started to get a little bit, I would say, overvalued. And it coincided with the election time, and during election time, ordinarily or naturally, the economy sort of slows down because you have the code of conduct, so no new projects get launched, politicians, government are all busy with the elections. And I think that is what we saw September 24 onwards, when the economy and the corporate profits slowed down. Particularly September 24 was a really bad quarter where corporate profit grew only 3%. It also coincided with a lot of uncertainty in the world. We have had multiple small wars, including 2 wars between Israel and Iran. We have had Lebanon, Syria issues, Hamas issues, small conflicts in Thailand, Cambodia, Azerbaijan, Armenia, and of course, closer home, India and Pakistan. And therefore, there has been a lot of risk on, risk off. Currency movements have been all over the place, and one reason why sort of safe havens like gold, silver, bitcoins have been doing well is because dollar movements have been like crazy. From 97, 98, the dollar index rose to 110 and then fell sharply to 96, 97. And last but not the least, the tariff thing has been an overhang since January, which has been almost 9 months. And particularly for India, 25% tariff itself was bad, and then we were slapped with another 25%. So as we speak, we are among the 2 countries only which have a 50% tariff. And I think amidst all this, markets have seen, I would say, bouts of optimism as well as nervousness. Foreign flows have moved out of India and to other, obviously, markets which have done well, at least temporarily. And I would say is that in all this, having a flat kind of a market is not a bad outcome after 4 great years. But there is a silver lining. I think both the Central Bank of India, which is Reserve Bank, and the government are now very, very clearly, pushing for growth. RBI has infused more than 10 lakh crores of liquidity into the system. The stance has changed from conservativeness to pushing loan growth, and as a result, growth in the economy. The government has also gone on an overdrive. We had 1 lakh crores of income tax benefits and now 1 lakh crore of GST benefits. Obviously, this rate cut of 100 basis point would mean that EMIs would lower, and to that extent, 30,000-40,000 crores of additional funds in the hands of crores of Indians. So it's almost a 2.5 lakh crores of fiscal stimulus. So I would say a lot of these headwinds have converted into tailwinds, and we are already seeing signs of growth coming up. Monsoons have been great, so rural economy is thriving. I think it's all about just getting this tariff thing behind our back, and we should start to look at the markets with a lot of optimism.
Right, coming back to our conversation with Avinash now. Avinash, help us understand in the news somewhat, which are the top 2 or 3 sectors that you are getting extremely bullish about, where the money can be made. Of course, this year again, like you pointed out, the market had been absolutely flat, with stock-specific moves definitely helping out in creating some wealth. In the new year, which sectors and what kind of stocks are you betting big on?
I think Sakshi, 1 or 2 sectors which look very interesting and attractive are obviously the GST beneficiaries. One is the automotive and the auto component space. We are also looking positively on the capital goods and the consumer appliances side. And also on the real estate side, I think on the real estate side also what we have been hearing is that inventories have been moving quite swiftly. Interest cuts have been happening, and that definitely is going to help. And plus, technology-oriented sectors, especially companies which are operating on the data center side, I think there's a lot of action. Yesterday, Google, has introduced the first AI center in Visakhapatnam. So that also goes a long way in saying that India is now going to get a bit of foreign technology here. So I think within the stocks, I think we are positive on M&M. We feel that at these levels also one could look at buying the stock for a good upside of around 3,900 rupees. On the auto component side, we have been telling the stock on your channel quite frequently. Shriram Pistons and Rings, again a very well-established auto component player from North India. Trades at around 2,600, I think could possibly see levels of 3,000 in the next 12 months. And obviously from the north, again, we are positive on Anant Raj. I think recently they concluded a QIP of 1,000 odd crores. Very strong traction, a 300 megawatt capacity on the data center side. And I think, in the next 2 years, we won't be surprised that the data center business will actually overtake the real estate business. So here, I think we could look at levels of around 775, 800. So, I think there are many more stocks, but I think these could be the key stocks where I think, in the current markets, despite the run up, I think these stocks could be accumulated by investors and they could make a decent risk reward.
Okay, got that. So those are the kind of sectors and stocks that one could definitely look at. Since you took the name of consumer durables also, we've seen what has happened with LG Electronics, the latest stock from this space to enter D Street. A stupendous rally is what we saw on day one, and it has continued to move higher as well. How are you looking at this? In fact, many brokerage houses are even penciling in 1,800 plus kind of targets for LG right when it has come into. And the focus of LG now to also expand its foray into the mass segment. They've started a new series with 18,000 rupees plus kind of appliances as well. How are you looking at this consumer durable giant vis-a-vis the others, and where do you think is the opportunity?
No, I think as far as LG is concerned, I think investors can expect better numbers and some more positive surprises in the third quarter. I think for the first time, the company will be making a conference call. We'll be talking to the analyst community. I think clearly one could sense the opportunity which is available, Sakshi. And I think one should also remember that few years back, a company called DMart had been listed, and after it got listed, everyone knows what happened. So I think the same, situation and possibility could happen with a company like LG because, the balance sheet is robust, the cash flows are very strong, it's a debt-free business, and the opportunity to scale up in India is quite significant. So I think, somebody who is looking at the next 2 years, I think could definitely do an SIP here, despite the fact that it's traded at a significant premium. My sense is that, you don't get such opportunities every day. So if you got to build your portfolio and got to, be with the best, I think it's better to do an SIP and stay invested for the next 2 years. You could expect a better risk reward going forward. So I think we continue to be structurally positive. Yeah.
Okay. So that viewers, in our series of the Diwali conversations with Samvat 2082 kicking off, Abha also spoke to Mr. Ajay Srivastava of Dimension Corporate Finance to also discuss the market mood this Diwali and the sectors which are set to shine in the new year. Let's listen into that as well.
Where are you looking at within the equity basket, Ajay? Is it which sectors? Because we've seen a lot of rotation this year.
Well, I think nothing new has happened in this country, except the fact that the same domestic sectors continue to take the route. Anything which is international exposed doesn't give you returns, whether it is IT, which has not given any great returns. Pharma has given some returns, but has been muted off late at the end of the day. So I think your domestic sectors, which are focused upon select niche areas, and I think when I say select niche is, one is auto, and second is engineering, and engineering also does phenomenal exports. So I think these two segments have been a very good bulwark. We are strong in India, good companies, all deleveraged companies. So auto, engineering, and the third category we have always said is good for India is the hospitals and the healthcare, because that's just starting off. You know, we can't even imagine where this has to go, the internal trajectory. So in terms of growth, pricing power, anybody who's been to the hospital knows what they used to charge 3 years back, what they charge today. So in terms of pricing power, demand, local demand, scarcity of supply, healthcare hospitals will do well and continue to do well. They can't do well every 6 months, but they do well over a period of 3 years. So auto, engineering, healthcare, and e-com. I think these are the 4 segments that we have divided our portfolio by and large in. There are a few odd stories which may be there, but 4 big segments where we have loaded ourselves. And let's not forget, thanks to gold, the gold loan companies. I think they will do, and they are doing, they will do astoundingly well in the next 12 to 14 months. And it's a liberal RBI. So gold loan companies will do well, autos, engineering, Indian healthcare, I think, and e-com. I think you've got a fair amount of companies in the portfolios to work with.
All right, so a list of more sectors that could shine in your portfolio over the new year as well. But what exactly is sparkling this Diwali is not equities, but is precious metals. Both gold and silver are noticing unprecedented rally and levels never seen before. Even as of today, gold is nearing 1.3 lakh rupees per 10 grams. Silver is now nearing 2 lakh rupees per kilogram as well. Several records have been broken in this year alone for gold and silver. Over 50, 60, even 90% of a move. In fact, for silver, silver has doubled investors' money in this year alone with a 100% rally that's being seen in the prices as well. How do you understand this? What is the way forward? This Diwali, will you see 2 lakh rupees on the MCX as far as silver is concerned? Let's get talking with Navneet Damani, Senior Group Vice President and Head of Research at Motilal Oswal Financial Services, to help us explain what exactly is behind this super bullish run of silver this time around. Welcome to you and thank you so much, Navneet, for joining in. Well, help us understand, are you able to fathom this kind of a rally that we have seen over the last 1 month alone for silver, which has outpaced even gold with the kind of rally that we are seeing? 2 lakh rupees per kilogram. I mean, I remember just about a month, 1.5 ago, we were just still talking about 1 lakh being crossed, and it's just shot up so smartly. How are you looking at this exuberance?
Well, thank you, Sakshi, for having me on the show. And as you speak, 2 lakh rupees per kg is largely on the physical side of the market where there is an acute shortage. But on the domestic front, if you see the calculated price of silver, it's still in the range of 1 lakh 60 to 1 lakh 63,000, which ideally will be the price once this festive season gets over, or maybe once the exuberance of the demand, which is the shortage of demand, which is in the market, gets over. That's about 15 days from now or 30 days from now. That's anybody's guess. But definitely this kind of exuberance is not going to last long. We've seen that in many cases. And over the last couple of years, we've had many shows with you also, where I have been very vocal and very bullish about being positive on silver, about 1 lakh rupees and 1 lakh 50,000 rupees, which both the targets are met. And as we stand today, the momentum is continuously going up and higher. It's not the
Absolutely.
view that
But
is
you
causing
you just said that, the large part of this exuberance is also because of the shortage in silver SPL. Can you explain to our viewers why this shortage has occurred? What exactly is happening on ground? And you also believe that once the exuberance of Diwali-led frenzy is concerned, once this is done, we could expect some cooling off on silver prices to 1.7 lakh rupees, 1.6 lakh rupees per kilogram. That's the level that you're expecting. But what is driving this move? What shortage is there?
But there are two shortages in the market, one in the global front and one on the domestic front. Globally, what has happened is the spot market is trading very tight. It's trading at a $1.5 premium to what the physical or what the futures market is. Generally, it's not the case. Generally, the futures trade higher and spot is prevailing at the lower price. But we've seen that the difference between the spot and the future price went up to as high as $3, which is not seen in the last 50 years. So that has led to a short-term trigger, and lot of participants who are unhedged or maybe who are overhedged had to have delivery inbound to deliver on the exchange, on the LBMA or on the COMEX exchanges to make good their position. And that is when the mad rush of silver short covering in silver started, which led to the sudden spike in the last 1 week or so, where prices have moved up by about 14-15%. As we speak, in the last 30 days, prices are up about 40 to 43% on the international front and roughly around 44% on the domestic front. Now, what has happened on the domestic front? We've not imported much of silver in the month of April, May, June. The imports were pretty shallow. But ever since July onwards, where prices started to rally, ETF started to have a bulk of orders because of FOMO coming into the market, where silver is not an industrial metal, not a safe haven asset, but as a financial asset giving you about 50-60% kind of return. So people started massively investing in gold and silver. And at the ground level, there is no material to have this kind of delivery. That has led to sudden spike because of the festive season, because of ETFs buying, because of Dhanteras being around the corner, and lastly, because of shortage of imports. These imports are going to catch up in the next couple of months or so from London, from Singapore, from China, and eventually the kind of premiums that are prevailing in the market at this point will settle down eventually. But how long this is going to sustain, it's anybody's guess.
Absolutely. Let me also welcome back Mr. Gorakshakar, who's with us, on the program to help our viewers identify what is the strategy now. I'm sure, Mr. Gorakshakar, your clients must also be asking. On the one hand, you have silver, which has doubled investors' money in this year alone. Gold prices, which have shot up near 60% in this year alone as well. Vis-a-vis Nifty, which is absolutely flat on a year-to-date basis. What's your suggestion, Mr. Gorakshakar, on that?
I think, as my other guest mentioned that, these prices are volatile. So definitely it's not going to be sustainable for long, but definitely I think the base effect will carry on. And I think, we have been telling our clients to be positive on companies which actually benefit from rising gold prices and rising silver prices. So I think when it comes to silver, Sakshi, I think the best bet is Hindustan Zinc. Clearly, this Vedanta Group company, my sense is the second and the third quarter could be significantly better in terms of profitability numbers. And in terms of gold, I think one can bet on the gold finance companies. Typically what happens is that when gold prices go up, the loan to value improves and the marketability of gold loans gets a better kind of a booster shot. So I think Muthoot Finance, Manappuram, these are companies which I think should do extremely well in the next 1 or 2 quarters. And I think clearly, if the market corrects or if there is an opportunity to buy these stocks at any decline, one should look at them as structural stories, because despite the fact that they operate in commodities, my sense is that gold prices and silver prices are going to head higher. We are not going to see a downfall in the very near term because most of the global central banks have been buying gold. And silver as an industrial commodity, the applications are also going up. So net, I think these could be 2-3 stocks where I think one should stay invested. And maybe on any mild correction, one could definitely increase their exposure here.
Okay, hold that thought. We are going to be discussing more about gold and silver, but 3:30 and we need to focus on the market closing at this point in time. 25,328, you can see a 0.7% of a rally as far as the Nifty is concerned, viewers. You have seen after 2 to 3 days of consolidated move, finally the markets have picked up some pace. Helping it is the Nifty Bank, 0.5% of a rally on this one as well. It's gone beyond 56,799 as well. You can also look at the IT stocks that were helping the move today, about 0.5% higher in trade. Among the heavyweight sectors, that truly moved up. Along with this, there were real estate sectors. This was the top moving sector. Look at this sharp 3% kind of a move that we have seen. PSU Banks, of course, like we discussed already, there is a lot of buzz about the PSU Banks merger that's lifting the sentiments, and 1.6% of a rally could be seen here. Let's also look at the metals that have been shining bright, and of course drawing from the precious metals as well. The hard metals index also moved up by 1% odd as well. Let me also now talk about the top gainers on your screens now. The NBFC majors, Bajaj Finance, Bajaj Finserv, Nestle India were the top three movers here. Anywhere between 3 to 4.5% kind of a move could be seen there. Asian Paints from the consumer space, and of course you can look at HDFC Life from the insurance basket, and Trent from the retail space, also reflecting the move on the ground as far as the festive demand is concerned. On the losing side, however, you had Infosys Bank, Tata Motors, Bajaj Auto, all of these stocks that fell down by 1.5% each. Infosys also dragged. Axis Bank and Hero Moto were the other top laggards in trade. Quickly coming back to both Navneet and Mr. Gorakshakar as well. Navneet, help me understand, at this point in time, since you do say that beyond Diwali, silver prices are going to be actually falling down, we are going to be seeing some cool off take place as far as gold and silver is concerned. Do you think this is the right time to book profits?
Well, if you're a tactical investor, you are sitting at about 70-80% kind of returns in silver, and that's definitely a good time where you should be booking some profit. But if you're a long-term investor, I still expect that silver prices can give you another 50% upside from current levels also. So from 1,60,000, we expect prices to inch towards maybe $75-77 on the COMEX and $250,000 on the domestic front over the next couple of years. So you stay invested as far as a medium-term, long-term perspective is concerned. But from a tactical perspective, this rally has got a little ahead of itself. There's a lot of premium in the market. Once this festive buzz gets over, some profit taking, maybe time-wise or price-wise, could be warranted. So it's a great time to book some profit and take some profits off the table.
Great time to book your profits, but in the long term, 50% more kind of a rally can be expected on silver is what Navneet has said. 2,50,000 rupees is what he's penciling in over the next 2 years too. In case you're a long-term investor, you could be looking at that target. For gold, what is the target that you mentioned, Navneet?
Well, gold is kind of in another exuberant zone. Maybe 4,000, 4,100 is where we lost some patience and we're not able to fathom the move that is going on for the last few days. Maybe post some consolidation, this is also likely to have some bit of price-wise correction or time-wise correction. But I expect that given that central banks are buying gold and will continue to add over the next few years, the rally is likely to continue towards $4,700 and in best case towards $5,000 also, which will work out to around 1,50,000 rupees on the domestic front. However, that rally is not going to be as fast as what we've seen in the past for gold. So that is going to be a staggered rally where you will see bouts of correction, where you will see better entry levels, and then eventually we'll head towards 4,700 and 5,000 levels as well.
Okay, got that. Thank you so much, Navneet, and thank you so much, Mr. Gorakshakar, for being with us on this program. With that, viewers, we wrap up, but the gold and silver rally can actually continue after some kind of a profit taking as well. $5,000 on gold and definitely 2,50,000 rupees as far as silver is concerned. 1,50,000 rupees for gold is the kind of expectation in the long term there is as far as gold is concerned. That's a wrap on the Business Today show, but don't forget to catch the market opening action tomorrow morning with Abba Bakaya at 9 a.m.
Hello and welcome. You're with us here on Business Today TV, and we're continuing our series of market masters understanding best what to expect from the new Samvat as we count down to celebrate